To the loan officer sales training with the mortgage calculator. Today we're going to be talking about reverse mortgages. We'll wait just a few minutes here to get started. Let us go live on all the different platforms here. Thank you everybody for tuning in nice and early. Feel free to drop a comment there in the chat as you tune in. Drop any questions you have in the chat as well as we go through the presentation here today. I hope everyone had a great weekend. It's Monday, ready to get back to it, ready to make some calls. And maybe some of you are interested in following up with some reverse mortgage calls this week after we go through the training here. But reverse mortgages is definitely something that you want to make sure you're familiar with before you go out and start prospecting. So looks like we're live on all the different platforms. We'll go ahead and get started. So welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, and this is our loan officer sales training that we do every weekday, 12 p.m. Eastern, where we go through more of the front end of the sales process of the mortgage process. Now, today we're going to be talking about reverse mortgages. This is the first time we've talked about this in a while. We had one other sales training on reverse mortgages a long time ago. And so we'll bring it back up here today, go over some of the same stuff, but some new stuff as well here. Now, reverse mortgages are very specific and particular. A lot of the times people who do reverse mortgages solely focus on reverse mortgages because it is a pretty niche product. One of the cool things is that it can have, it can come along with higher compensation because of the nature of a reverse mortgage. But it's definitely constricted to certain ages and certain people, certain LTVs. So it's a narrow scope there of the people that can qualify, and of those that can qualify, there's definitely hurdles and obstacles for us to get through. But I'm sure a lot of you are curious about reverse mortgages. Some of you may know how they work in general already, but the first slide here we're going to talk about is just what is a reverse mortgage, right? So with a reverse mortgage, one of the borrowers must be at least 62 or older, right? This is for, seniors only, and it must be a primary residence, which we have down here. But essentially what a reverse mortgage is making it so that the borrower does not have an obligation to make a payment, right? They're essentially going to refinance their home if they have the equity needed. They're typically going to get cash out so that they can have cash, and then they don't have to make the mortgage payment anymore. Now, notice that I underscored obligation. So this is something that not a lot of people really know, which is a lot of people think on a reverse mortgage, because a reverse mortgage, I guess I should go back. A reverse mortgage is essentially negative amortization, right? The balance on their home is going up, their equity is going down over time. Now, a lot of people think that, that's it. And you're going to lose equity in your house every single month. And eventually you're going to be, underwater and all this kind of stuff. Well, keep in mind that all a reverse mortgage does is make it so that there's no obligation to make the payment. The borrower could still make the payment every single month and it will still pay down the balance like normal, right? What the reverse mortgage does is give them the availability to not make the payment. And then of course it's reverse amortization from there, right? So 1 month they could make the payment, 1 month maybe they don't have the cash, maybe they don't make the payment, or maybe they just keep making the payment every month and just want to make sure they have the reverse in place for some kind of emergency. Maybe it's a medical emergency or whatever the case may be, or maybe it's just retirement and they want to be able to make sure they have enough money and that they don't necessarily have to have the obligation of making the payment. So keep that in mind. With a reverse mortgage, they can still make the payment and it will still amortize down and pay the balance down. But when they don't make the payment, of course, there's negative amortization. So, As I said before, some seniors may even just want this in place just in case of an emergency. So they can get cash out, have a nice amount of cash to do what it is that they want with it in their senior years. Maybe they want to retire, maybe they want to travel, maybe they want to have money available to give to their grandchildren, while they're still alive, right? Instead of waiting until they pass away and then give somebody the house, and the house has to be divided between family members, all this kind of stuff, right? So they may want to take some of the equity out and spread it around while they are still living, or be able to do what they want to do, right? Especially now when 62 is not very old when people are living to 100 now, right? So even though 62, you're considered a senior, there's cool programs like this that you can take advantage of. There's still plenty of living to do for most people after the age of 62 that they may want money out of their home for, and or not have to make their mortgage payment if they want to use the money for other things. Right. So again, like I said, if you're 62, you still got a lot of living to do probably nowadays. Maybe you're traveling the world or going on vacation, or just want to actually use, the, capital that's available to you, both from the equity in your home, but then also not needing to make that payment. Again, maybe an emergency comes up and they say, hey, no worries, I don't have to make my mortgage payment at all. So imagine how much money that can free up, not only getting cash, but also not having the obligation to make a payment. So when you're talking to customers, that's one of the things to talk about. Is a lot of people fear that if they get a reverse mortgage, all of a sudden they're going to be underwater. All of a sudden they're going to somehow lose their house. But for one, first and foremost, they can make the payment just like normal, and it will pay down the balance just like normal every single month if they would like to. And then if they'd like to skip a month, no problem. If they'd like to skip 10 years, no problem. As long as it's always their primary residence, they can never be kicked out of their home. So, for example, some people think that you'll get your home taken away. As long as you live there, you could live to be 150 years old and never make a mortgage payment. So at the age of 62, you could do a reverse mortgage. You could then live in the house for another 70 years. Obviously not realistic as far as age-wise, but you could live in the house for another 70 years. And the home cannot be taken from you, even if you owe $1 million now on a $500,000 house. As long as it's your primary residence, the home will never be taken from you, even if you owe $1 million more than the home is worth. Now, here's another thing that people don't know about reverse mortgages a lot of the time, is that even once that person passes away or it's no longer their primary residence, the family or estate has the opportunity to purchase the home from the bank at 95% of the market value. So even if that person owes $1 million more than the home is worth, the family could, refinance it and pay off 95% of the market value, or, could just buy it back from the bank, cash or whatever it is, for 95% of the market value. So there's a lot of stigma around reverse mortgages, but as you look into it more and more, you realize, while even through all of the stigma, the bad rap that it's gotten, people trying to say you'll lose your home or something like that, when you really look into it, the benefits a lot of the times for older people outweigh the cons, because typically, the cons are exaggerated. People have some kind of preconceived notion that reverse mortgages are bad or that they're predatory. Now, in the past, has there been issues with people essentially lending kind of predatory on these loans? Of course there is, because people were able to make up to like 13% commission, right? On like 1,300 basis points for us loan originators, right? and so with a lot of money and profit comes a lot of, people coming in and trying to make these reverse mortgages, trying to sell them, even if they haven't educated the borrower enough on them. Here's one of the things that people would typically leave out in the past when, they were kind of being predatory about this lending. They would leave out the fact that the person still has to make their taxes and insurance payment, right? So they may get somebody into this program who thinks, oh, I never have to have a dollar again. Well, the only way that your home would be quote unquote taken from you is if you are not living there as your primary residence anymore, or you do not pay your taxes and insurance, which is the same for any other loan, any home, no matter what happens. If you don't pay your taxes and insurance, the home gets taken from you, right? So it's no different than any other loan, but you have to make sure that your customers understand they are still responsible for paying the monthly taxes and insurance. So while they don't have to pay a principal or interest payment on their mortgage, of course they have to keep up their taxes and insurance. But when people were kind of being predators about this, they would tell people, oh, nothing, you don't have to worry about anything, and not educating their borrowers properly. Then their borrowers aren't able to make the taxes and insurance payment, and then maybe the home may get taken away, or maybe they don't live there anymore and it's just a family member living there. And then again, that's going to trigger the reverse mortgage to become called due because the person doesn't live there. Maybe the person goes and lives in an old home and one of their family members moves in. Well, they can't keep the reverse mortgage because it's not their primary residence. So as a loan originator, as long as we do our job, which we're very big on here at the Mortgage Calculator, as long as we're a loan officer consultant and we're educating our customers on what a reverse mortgage is, what are the pros, what are the cons, what are the things to be aware of, it's actually a great product for the people that it makes sense for. But there is that stigma that we have to get over. And I'll talk about how to get over that here in a minute. Now, most common is a HECM FHA loan, right? HECM, HECM is what we call them. That's the most common reverse mortgage by far. Now, there's companies that have their own portfolio products of reverse mortgages, but by far the most common reverse mortgage transaction is a refinance of a HECM FHA loan. Now, you can also do a purchase with a reverse mortgage, which is very strange. And I won't get into that now, and I don't want to confuse everybody, but you can actually do a purchase with a reverse mortgage loan. Now, how many people purchase using a reverse mortgage loan? I don't have the exact statistics, but typically you would consider it's about 95% refinances and maybe 5% purchases. So when somebody says they're doing a reverse mortgage, 95% of the time it's going to be a HECM FHA refinance where they're typically going to get money into their pocket and then not have the obligation to make a mortgage payment anymore. Now, because of this product's nature, of course, they have to have high equity, right? So again, we're narrowing the scope of people. That's why it's such a niche product. They have to be 62 or older, and they have to have typically 50% or more equity in their home, 40, 50%, because obviously it's a negative amortization and there has to be room there for it to amortize negatively, right? They have to have the actual equity in order to forego making payments in the first place. So typically 50%, give or take, equity needed. There's got to be enough meat on the bones there for them to lend out the money, not require you to make a payment, and for that to essentially eat away at the equity, right? But the equity's got to be there from the beginning. Again, last thing, primary residence only. You must live there as a primary resident. Now, the person who gets the loan that's 62 or older, maybe they may pass. So let's say, notice I said one of the borrowers must be 62 or older. If the borrower is 63, but their spouse is 55, that's okay. They can still get the reverse mortgage. And then, of course, if they pass away, the person, even if they're not 62, can still stay in the reverse mortgage as long as it's their primary residence, right? So primary residence is the big key there. As soon as they move out, or there is no making it into a second home or an investment property or allowing a family member to live there instead of you, it's primary or nothing. So just make sure when we're talking to our borrowers that they understand that. Now, let's talk about how we can go about selling these reverse mortgages. Again, before I even talk about any of these points, especially because there's stigma about it, especially because we're dealing with senior citizens that are targeted for scams a lot, the most important part about this is educating your borrower on the details, on the ins and outs, the pros and the cons. Now, here's something that's great that's been put into place as a protection, because again, in the past, there has been people taking advantage of this and trying to take advantage of customers using this product. And so they actually do have to do a HUD consultation with a third party HUD specialist, that before they are able to close on this reverse mortgage, they actually must get a certificate that they completed that consultation, which of course that third party, that HUD specialist or whatever you'd want to call it, is going to point out to them the pros and cons. Most of the time they're going to focus on the cons, right? That's kind of their job, is to make sure that the borrower is aware of the potential pitfalls. And so educating your borrower is not only important for the whole transaction, but it's also important because you're essentially going to have this other party come in and you can't control what that party says, right? So typically it's going to be a little bit more negative and focusing on the negatives of the program. So that's why it's even more important that we give them the full picture multiple times to make sure they understand that, yes, there's these cons, which I'm sure the consultant is going to talk to you about as well, but there are a bunch of pros. We have to take it how it is, right? Now, notice here I put including family when we're talking about educating the borrower on details. A lot of the times, a senior citizen is going to have somebody that they're going to be talking to about this, maybe somebody that they go to that they know and they trust. This may a lot of the times it's their children, right? Son or daughter, just to be involved, to get opinion. Maybe the senior citizen is, just wants that extra help or that assurance, or maybe they know someone who is a CPA, or maybe anybody who may be more knowledgeable on finances and whether they should do this or not. So the reason I put this including family is that a lot of the times it's in your best interest to speak to whoever they trust and use, right? To be able to get on a call with both. If the borrower keeps telling you, well, my son said this and my son said that, and say, well, can we get on a call with your son so that we can all make sure we're all on the same page about the pros and the cons, right, of it. So that's why I put including family. A lot of the times you're essentially battling between the borrower and people that they consult with. And if the people that they're consulting with about this don't know the pros and cons, if they only know what they've heard, these negative things, the negative stigma, trying to say that people could get kicked out of their home, that's a big problem. And so the best thing to do is try to involve that person in the conversation so that they get the whole picture. Because if they're not getting the whole picture, then they're only going to be focusing on the negatives. Now, here's something that you can all do. I would make sure that you do a little bit more research if you're not familiar with reverse mortgages, right? If you're not familiar with reverse mortgages or used to them, I would do some more research, do some more training. But once you feel comfortable with it, you can educate your sphere on this product, right? Most of you, just like most borrowers, people who probably think the same stigma about it, may not know exactly how it works. You all know people, who could use this product. We all know seniors that have a good amount of equity in their home. And so, you may just want to educate them on it, right? When I first got into the business and got educated on reverse mortgages, I talked to both of my sets of grandparents about the product and talked to them to see if it may be a fit for them. And also their friends, also my aunt and uncle. And so it's more just about letting them know how this works to give them the option to do it. You don't have to be pushy or salesy, and it's not right for everyone. It's not meant for everyone. It's meant for the people that want to take advantage of it and use it, but they just need to be educated on it, because right now a lot of people are just turned off by it or don't want to be involved in it. And so they're not even considering it. But if you put it in front of them, educate them on the pros and cons, now they can consider it. And this especially is a product where you don't want to be pushy in any means, because if you have to be really pushy, that means it probably shouldn't be happening in the first place, right? But you all know people that are probably in this position, so you should make sure to educate them on it. And when I went to my family members, I basically said, hey, when I really learned about what a reverse mortgage is and how it works, it's actually really cool. Because when I first came in, they say, oh, I don't want to do a reverse mortgage, right? That's like something that's bad. But if you actually educate them on it, it may be right for them. Now, another way that we can go out and try to get this reverse mortgage business, targeted cold call lists. We do have targeted lists in the Mortgage Calculator CRM. In the auto dialer, there's targeted lists of, these are, seniors that are 62 and older that have a home. In theory, they have high equity, but we can't really tell that. But they are 62 or older and are homeowners in theory, right? And so those are lists that you could call to talk to them about that. Of course, you could think of plenty of events that would have, senior citizens at them in some type of way. And so obviously you could target, different events. And here are some great partners that or not even just partners, but referral sources or people to talk to are CPAs, financial advisors, tax preparers. These are the people who are speaking to senior citizens about their finances, about their life plans, about their retirement plans. So these are the people that if you have somebody that's a CPA or a financial advisor and they're not familiar with the benefits that could potentially give their clients with a reverse mortgage, you want to definitely educate them on that. Let them know that you're there to help any of their borrowers through it, because this is a huge financial life decision. And these are the people that they're speaking to about that. They're planning their retirement. They're planning how they're going to financially survive the rest of their lives, especially because people are living so long nowadays. It's not like it used to be when you'd retire at 55, right? I mean, nowadays, a lot of people aren't even retiring until 60, 70, 80. Some people aren't retiring at all, right? My grandfather's 84. He's still not retired, and he actually is a financial advisor, funny enough. But my point is that it's different nowadays. People have a long life to live. They are going to have to make their finances work for that. And if you take away that burden of the mortgage payment, it opens up a ton of possibilities for them. Not to mention the fact that most people are going to get a good amount of cash out into their pocket. So you take a senior from, barely making it because they just have their Social Security and maybe a little check from their retirement or whatever it is, and they're just trying to scrape by. We can take that person and turn them into somebody with a big lump sum into their pocket without the obligation to make the mortgage payment anymore. So their Social Security and stuff now doesn't have to go towards the mortgage payment, and they also have cash in their bank. So again, it can open up the possibilities for people, and a lot of the times it's just like, hey, do you want to enjoy your, later years and make it much easier, much stress-free? A lot of the times these people have to downgrade or downsize into a smaller home once they retire, because they can't afford it any longer with just their Social Security and or retirement. And so they go from the house that they've always lived in for 20, 30, 40, 50 years, and then having to move. One of the things that Jose talks about is that doing this saved his parents, he feels like, because they would have had to move into a different home. They were so used to it. His parents are very old, and he just feels like the stress that was upon them of having to leave the home that they've always had, it's enough for somebody that old. It may be enough to put them over the edge medically or mentally to have some issues. So it can also save people to stay in their home for as long as they want to until the day they pass away, and no one can ever take the home. They don't have to make a payment. They probably got a lump sum of cash in their pocket to do whatever it is that they want to do in their final years, instead of just saying, oh, I passed away and I left 50% equity to my family, and that's great. But there are other ways to tap into that equity. There are other ways to make it so that you can live another 10, 20, 30, 40, 50 years without needing to make that mortgage payment or have to worry about being thrown out of your home, as long as you pay your taxes and insurance. So CPAs, financial advisors, tax preparers, they're right there at that crossroads, right? Where people are trying to figure out what would their financial plan be for the rest of their lives. That's why these are perfect people to talk to about it. And again, a lot of them are educated on that. They might not know the pros and cons of it, particularly the pros. Most people know the cons, but they're confused about the cons. Most people think that they'll eventually go upside down on the home and somehow end up owing money, or that their heirs would end up owing money. No one's ever going to owe the bank money, right? That's something that people need to understand. If you're upside down, then you can just hand them the keys and walk away. So you could be the son or daughter of somebody who passed away that had a reverse mortgage. They could owe $500,000 more than the house is worth, and you could just either refinance it and pay off 95% of the market value at the time, or you could just hand them the keys and say, I don't want to deal with it, and that's it. Right? So there's a lot of advantages to it. There's a lot of pros. And then even with the cons, there's a lot of things that are misconstrued. So it's our job as a loan officer consultant, like always, to make sure that we're educating our borrowers. And a few ways that we can get to those borrowers are obviously our sphere and educating the people in our sphere. But we do have those targeted cold call lists. If you're into reverse mortgages and you think this is something you want to target, we have those lists for you in the auto dialer. And then there's also events you may go to. I mean, people who are really serious about selling reverse mortgages, they're hitting events that they know that senior citizens are going to be at, just to be there, to talk, to meet, and to be available. And then, of course, the best partners or people you could talk to about this are the CPAs and financial advisors and tax preparers that are talking to seniors already about the rest of their financial plans. Let's see here. I see we have a question. Can our CRM quote reverse mortgages? No, reverse mortgages are going to be totally different, right? There's no, CRM that would be able to quote those. So our reverse mortgages are going to be brokered right here. So we would do those as brokered, not correspondent. And you would essentially be getting the quote from the lender that you're brokering it through, right? So it wouldn't be something we quote in our CRM. That's kind of something totally different. Plus, we wouldn't quote it anyways because it's brokered. It's not correspondent. So there's no pricing, through Optimal Blue and stuff like that. So we're going to communicate with the client through our system. We're going to accept their application through our system and all that kind of good stuff. But at the end of the day, you're going to get the actual quotes from the lender that we're brokering the loan through. All right. Looks like we're right on time then at half an hour. So remember, educate yourself on this. If it's something that you want to go out there and do, definitely important to know the ins and outs, because your number one job with this product is education for sure. So I appreciate everybody tuning in. Remember, we do this 12 p.m. Eastern time every weekday where we go through the sales and more front end of the process. So we'll be back with a new topic. I appreciate everybody tuning in. Thank you. We will see you tomorrow, 12 p.m. Eastern, for the next episode of the Loan Officer Sales Training with the